Welcome to Maths for All. I'm Aisling Flynn. This is Financial Maths 1.5, Income Tax. Income explained. Gross income. So the gross income refers to gross salary, gross pay or gross wages. The word salary is usually used when a yearly amount is given for earnings. Gross pay would be like when you get paid per hour, and gross wages you would be paid per hour and also per week usually. Okay, but they all refer to income, money coming in. Gross income is the pay calculated before any deduction is made. So the initial calculation. Deduction. A deduction is an amount taken from the income. And there are statutory deductions. These are deductions that must be paid by law, so you have no choice. And we pay income tax or PAYE on all earnings. We pay USC, Universal Social Charge, and we pay PRSI, Pay Related Social Insurance. Now we'll go through each of these deductions one by one, and we have no choice, we have to pay these on earnings. Non-statutory deductions are extra deductions that you may choose to pay, or they are voluntary deductions. For example, pension. You may choose to pay into a pension scheme which when you retire will give you a larger amount than the regular state pension. You may choose to pay into a health insurance scheme like VHI or LEA, or there's other ones, to get the benefit of those schemes, and it will come out of your paycheck each month or each week. You may choose to join a trade union and their fees will be deducted from your paycheck every month or every week. Net income refers to the income when all the deductions are made. So how much is left? How much does the worker actually receive? And it is also called take-home pay. We will focus on PAYE in this video. PAYE stands for Pay As You Earn. So if you earn more money, you're going to pay more tax. And PAYE is referred to income tax in many of the exercises, essentially being the same thing. There are two rates of tax in Ireland. The standard rate, which is around 20%, now most people pay that, and the higher rate, around 40%, which some higher earners pay. And the rates can change slightly each year with each financial budget. Okay, so we'll look at some examples shortly that use the standard rate and the higher rate. Each working person is assigned a standard rate cut-off point. So it is what the word suggests, it is a point at which the standard rate stops. It's typically around 33,000 per year, and this is the point at which the standard rate finishes and the higher rate begins. Tax credits. Tax credits are allowances given to each person of an amount of tax that they do not have to pay. Okay, so they're a good thing. Yearly tax credits are typically around 1,650 for a single person. Notice I specified single person. Tax credits vary from person to person and they depend on things like your marital status, type of job and many other categories. For more information on that, visit the citizensinformation.ie. All of the percentages and figures will be provided for you in a question. You don't have to recall any of them. Example. So the first example is Sarah. Sarah earns €28,000 per annum. So per annum means per year. The standard rate of income tax is 20% and the higher rate is 40%. Her standard rate cut-off point is €32,000. Her tax credits are €1,650. Part A asks, how much income tax must she pay? And B asks, what is her net income? So let's do part A first. Okay. Okay, so first things first, her income is €28,000 and her standard rate cut-off point is €32,000. Now you must ask your question, does she earn €32,000 or more than €32,000? No, she does not. So Sarah remains in the standard rate bracket. Okay, she doesn't reach the maximum amount for standard rate. So all of Sarah's income will be taxed at standard rate, which is 20%. Okay, and we don't have to go near a higher rate at all. So 28,000. Okay, well, let's find 20%. Now there are options for figuring out percentages. You can use the fraction method where you multiply by 20 and divide by 100, or you can use decimals. 20 divided by 100 is equivalent to 0.20. Okay, they will both give you back the same answer. Calculating here, €28,000 multiplied by 0.20, and I get 5,600. Okay, now so that's the initial tax bill. However, let's reread the question. Does she actually pay all of that tax, 5,600? Well, we're also told that her tax credits are 1,650. So remember, these are an allowance for tax you do not have to pay. It's a good thing. So she does not have to pay the full 5,600. This is called gross tax. It's the initial tax calculation, but she doesn't have to pay that. So how will we use the tax credits? We'll take 5,600 minus 1,650. This is tax credits. Okay, so let's subtract that, 1,650. And the tax that she does have to pay is 3,950. And this is called, you can call it net tax, net meaning after deductions, or you can call it tax payable. So this is what she does actually have to pay. Okay, so that's our answer to part A. Part B then says, what is her net income? Okay, so we take her gross income, which was 28,000, and we'll subtract the tax that she pays. So these examples are simplified. We're only considering one deduction, PAYE, not all the others, which we'll get to later. So subtracting there, and I get €24,050. Okay, and this is her net income, or sometimes it's called her take home income or take home pay. So it's how much she actually receives. Alright, so pause that if you want to look back through the calculations and do it yourself on your calculator. Make sure you're getting the same. Now, second example, here we have Alan. Alan earns €42,000 per annum, so bigger amount. The standard rate of income tax is 20% and the higher rate is 40%. His standard rate cut-off point is €30,000 and his tax credits are 3,300. Okay, so different figures here. Again, we have to find out how much income tax he must pay and what is his net income. Okay, so let's figure out the tax first, part A. Alright, so let's consider his income, €42,000. Okay, and his standard rate cut-off point is €30,000. So Alan earns 30,000 euros and then some more. Okay, so he does pay standard rate on the first 30,000 euros, but he also must pay some higher rate for what is above 30,000 euros. So the first thing to do is to take his income and let's split it up into standard rate and higher rate. So he goes above 30,000 euros, so he'll have the full 30,000 euros and you'll have to pay 20% tax at that. Okay, it will be taxed at 20%. Now, how much above 30,000 euros does he go? Okay, and how much must be taxed at 40%? So you can use subtraction. 42,000 minus 30,000 will give you 12,000. So he goes 12,000 euros above the cut-off point, so that 12,000 euros will be taxed at 40%. Okay, so we've two tax calculations to do on the calculator. Okay, I'm going to use decimals this time round. It takes up less space. So 30,000 euros is taxed at 20%, and that comes to 6,000 euro. Okay, and 12% is to be taxed at 40%, or 12,000 euro rather is to be taxed at 40%, and that comes to 4,800. Now these combined will give the initial tax bill, so we'll add the two of them. We get 10,800. Now that's quite a lot, isn't it? And this is his net tax. So he might get a fright when he sees that the first time. Okay, but does he have to pay all of that tax? No, he does not, because he has tax credit and they are 3,300. So let's put them to good use. Okay, that's his allowance that he does not have to pay. So we take it off the initial tax bill. Okay, so we minus the tax credits. Minus 3300. Okay, and that comes to 7,500 euros. Okay, so this is the answer to part A. This is his tax payable. All right. Okay, so you can pause again and review those steps. The most important part is to divide up the income correctly into standard rate and higher rate. Okay, so part B asks what is his net income. So he began with 42,000 euro and he has to pay 7,500 in PAYE or income tax. So we'll subtract that and we get 34,500. Okay, and that's the answer to part B. Of course, these are simplified examples. We're not taking into account all the other deductions that would typically come out of a person's salary. Okay, it's just to illustrate the use of standard rate and higher rate. So pause there and review if you need to. Now, here's an example in working backwards. Lorraine and Ger had a net income of 60,400 last year. Tax. There's a gross tax was calculated at the standard rate to be 14,700. And here's a glossary of some of those terms we used during that video.